Hello people. Before I explain inducement, let me ask you guys a simple question. Why do you think an order block works in the market? Do you know the exact reason behind why an order block works? Or on the contrary, why an order block doesn't work? Why an order block fails in the market? So obviously the answer is there's no answer actually. The only answer is data, the backtested and forward tested accumulated data over years, or at least years of data accumulated over quite some time, taking time with clarity. So that's the only answer. Data is the only answer. What's the other answer most people give? They usually say that you cannot know the exact reason behind why something happens in the market because the market is full of probabilities, right? So of course, this is also a true answer, but I don't really take in or observe this answer because it's very easy to say this, right? When the reason is just probabilities and possibilities, what's the thing that you have learned from telling this answer? Or what's the thing you have learned from believing this answer? The answer is absolute zero. You don't learn anything when you just give out these philosophical answers, right? So of course in trading, zero won't work. You need to make progress. You need to understand the market better. So obviously we will have to stick with data. And now let's come to another step of reality. Does most people backtest? Do most people forward test? The answer is of course no. I know it. I have been there myself. Most people don't backtest. Even if people backtest, the clarity of their data is not really that strong. So it's true that most people don't actually understand how they should backtest properly. I'll post videos of those things in the future or in the next week. But for this video, let's understand fundamentally why inducement is very important in SMC. You don't have to be an SMC trader to watch this video because this is a very fundamental video, not just this video, all of my videos. So, okay, first let me ask you this question. So obviously, if you see here, the market came down, went up, it destroyed this order block, failed these two order blocks, went up, and then mitigated this OB. This is one of the perfect examples of mitigation, a perfect mitigation. And then the market just kept on coming down. So obviously this is a supply. We will just call this order block for this video. And then the market kept on coming down, giving us a proper, valid, and a strong break of structure towards the downside. Okay. So of course this OB worked. These two OBs didn't work. What's the reason? When I ask you guys what's the reason, you don't know the answer most of the time if you don't have data, right? So my primary focus for this video will be to guide those people who don't have data, who don't know how to backtest properly, so I can give you some clarity on how you should move forward when you are approaching order blocks or SMC in general, right? Okay, so I'll obviously explain this example at the end of this video. First, let's look at the technical aspects. All right, so here you see two examples. You should understand that either one of these two examples should compulsorily happen in the market. Either this should happen, or if this doesn't happen, then this should happen. So there's no way around these two things. So now already we are in 50-50 probability scenario. That's a good thing. Now let's look at the second thing. So the example number one towards the left side, this example doesn't have any inducement present in the structure. Let's call that this is a breakout structure towards the downside. I'll just draw this. Okay, so that's breakout structure towards the downside. Obviously, then the market is in a downtrend. So you're marking your point of interest, which is your order block. You can call it supply if you want. And then we expect that the market should go down and again break this low, right? So this is the same drill we do again and again in the market. So now you will understand the magnificent importance of inducement. So the structure that's present towards the left side doesn't have any inducement. So what usually happens is, so first before we talk about inducement, what is inducement? What's the definition of inducement? Like I say in all my videos, inducement doesn't mean anything, but it's just liquidity. You can call it a more significant portion of liquidity that's accumulated and that's present in the past of the market. So that's the simplest definition of inducement you can get. So it's nothing but liquidity, right? So if the market wants to move towards a certain side, it needs to accumulate liquidity and it needs to hunt liquidity, right? So there is no accumulated inducement here. So for hunting, for the market to hunt something, I mean, I'm just calling it hunting, so it sounds like as if the market, as if the banks are trapping you, which most people believe, but okay, I'll just follow along with that, right? The market needs to hunt something, hunt some liquidity in order to follow its trend, which in this case is downtrend, right? So since there is lack of inducement, which means lack of liquidity, which means that the market will have to use some other liquidity that's present within the structure. So what happens when you take an entry here? The answer is very simple. The market hunts your point of interest. The market hunts your order block. Your order block gets invalidated because the market hasn't hunted enough liquidity to follow its trend. So guys, I mean, it's a one sentence, two sentence answer because it's that simple. That's all you have to know. So that's the reason most of the time. Of course, there are multiple things, multiple factors in SMC, but let's just look at inducement here, right? So now let's look at towards the right side. Okay, so if you see here, this structure has accumulated inducement, which means the market will most probably hunt this inducement and then mitigate and valid order block, and then the market will most probably follow its trend towards the downside. So this is the simplest way you can understand the fundamentals of inducement. Like I said, it's very important, just like anything else, just like marking a perfect order block, just like marking perfect market structure. Inducement is also a very important factor in SMC. All right, so that's the reason this order block usually doesn't fail, because the market has already hunted some accumulated liquidity, and this order block will be a catalyst where the market can change its short-term uptrend to short-term downtrend in order to follow its long-term objective, which is downtrend, right? All right, so I hope this explanation was clear. If you didn't understand this explanation, please leave your doubts in the comments. Now let's look at another important factor that you should recognize in the market. Now if you just look at these two structures clearly, do you see some resemblance? Do you see any resemblance in these two structures? You should, because if you look closely, this point, right? This point right here is nothing but this example. See? This point is nothing but the first example. So when you mark an order block, so you do the exact same things you have done here. You mark an order block, you mark that this is a breakout structure, a valid breakout structure, which it is not. So you do all these things for the first example right here, and then you expect the market to respect your point of interest. The market obviously doesn't care because it hasn't hunted enough liquidity. I mean, if you see, this is just the first step of the mistake, right? So I have seen most people, after they get this wrong, now they think that this is a breakout structure. That's completely wrong. They think that this is a breakout structure. So according to them, this is a breakout structure. This is a breakout structure. Once the market goes up and hunts this liquidity, this is also a breakout structure. So now, according to their mind, they think that the market has changed from downtrend to uptrend, which it has not. The market hasn't changed from downtrend to uptrend. So if you see, like, yeah, all things are interconnected. If you make one mistake, then that it's like a dynamo. What's that? It's like a domino. The things keep falling and falling, and you lose your momentum. So this is very, very critical. You should be aware when these things happen in the market. This is the reason this order block fails, because this is nothing but this point in the structure. That's the reason this order block works. This order block reacts very strongly towards the market. Usually, personally, when this happens in the market, I don't even take confirmations. I just straight away take limit entries, put my stops above this OB, And my TP is, of course, fixed TP 3 hour or 2 hour, but I expect that the market should at least give me a breakout structure towards the downside because the market is in downtrend, right? So yeah, this is how you guys should approach inducement in the market. So I hope this was clear. Now let's go back to that example using this exact explanation that I gave here, and let's try to figure out what's happening in the live market. Now, I believe that after that explanation, you guys yourself will be able to answer no for these 3 questions. So let's go over this once again. Why did this OB work? Because this OB was after market accumulated multiple inducements. So when the market was coming up, it hunted multiple inducements, which means it hunted multiple liquidity. So now this OB will work as a catalyst for the market to change its minor trend, which is from minor uptrend to minor downtrend. And we expect that the market will give us a breakout structure towards the downside, which happens right here. Great. We can make money. So why did these 2 order blocks fail? The answer is, of course, example number A. You should be able to answer this yourself. No inducement. So these 2 structures have failed. Now, if you look at this second order block a bit closely, you will see that this can be taken as an inducement for this order block, right? So this is obviously an inducement. There is no question about this. But now you should ask the question, if inducement is present here, why did this order block fail? That's a valid question. The answer is, this is where we use other factors of SMC. So like I said, inducement is not a god. So everything that is worked upon as inducement works. This is where we use other factors that make up the pillars of SMC. For example, in this case, finding a valid order block. This order block is not valid. So even though there is inducement present here, this order block is a very weak order block. Let me just explain that in a simple word. So the question is, what did this order block achieve in its life? It didn't achieve anything. Did it break any structures? Did it manipulate any structures? Did it break any other order block that's present towards the left side? The answer is no. I mean, like I said, guys, this is where we go into other factors. So this order block is not a strong order block. This is not a valid order block. Even in my worst days, I won't be trading this order block. I won't even use confirmation most of the time when I'm trading this order block. Let's see that whether if this gives us a 0.5 retracement. So if you see, the market does give us a 0.5 retracement, then you can probably take confirmation entries in this order block. But in this case, the order block fails, which is completely fine, because this is where you should again think that probabilities and possibilities are at play, because we did everything we can do. We marked the perfect inducement. We marked the perfect order block. If you want to risk taking entry in this order block, obviously you can use confirmation entries. Okay, so I think we are going off rails, off topics. This video is only about inducement. So guys, this is all you have to fundamentally, at a basic level, this is what you need to know about inducement. Look for example A's in the market. Look for example B's in the market. Happily, peacefully, with clarity, just trade example B. Don't look at example A ever in the market. That's the best chance to make simple money. So like I said, this is example A, right? This point is example A. Let's just put this here. And this is example B. These 2 points, let me just delete everything. These 2 points, this point and this point, these 2 points in this place in the market acted as inducement, acted as accumulated liquidity. Okay, so I don't mean to go on about this. This is the simple way you should understand the fundamentals of inducement. I hope you guys learn something new. So if you have any doubts, leave them in the comments. I will see you guys in the next video.